Ja, herzlich willkommen zu einer neuen Ausgabe SI Talk und ich habe wieder ein Startinterview. Mark Redcliffe, er ist bei mir von Gen 3 Oil Corp und er wird uns jetzt die Company mal vorstellen. Ich habe den Tipp bekommen von einem Bekannten von mir, dass ich mir die Firma unbedingt anschauen soll und daher habe ich mir gedacht, ja okay, mache ich gleich einmal ein Interview, wenn es möglich ist und es hat zum Glück heute hingehauen. Mark, thank you for your time. I said in my German introduction that, it sounds in your name, Gen 3 Oil Corp. You are in the area of oil, but you're in a special area. You're not really an oil company. You're not drilling for oil. You're not producing oil. But why the name coming up with oil company?
The name predeceased my my arrival at the firm about almost 3 years ago. It was originally a mining company, and they loaned money to a technology company which was involved in clean tech. The name was chosen at that time. The imagery back then was all jugs of oil and black, black vol containers, things like that. It didn't make a lot of sense from a branding and an imaging standpoint. We've certainly pivoted. We prefer to use more greens, and we are a clean tech firm now, so we've backed away from that. We don't use the oil corp in most of our work, and I'm sure that down the road we will move to rebrand the company with something slightly more generous. And but we are definitely involved in lubricants. That's what we make. So if I was to tell you, most of your viewers will probably know what used motor oil looks like. It's black. What we do with our proprietary process is we clean it, and effectively we strip out all of the antioxidants and the dispersants that have been burned up through the engine use, and we make it look like a glass of water. Very low odor. And then what we do is we sell that wholesale to offtake buyers, in our case, a super major. And what they do is they add those detergents, dispersants, antioxidants back. And what you see then is a gold colored product. That's what you're used to. So a base oil makes up 75 to 85% by content, by volume of a passenger car motor oil. If you go to the mobile petrol station, you would be picking up a 5W20, a 5W30, a 10W30. We're the guts of that particular product.
So your product is clear like water. Then oil for me is like golden shining stuff, and not clear like water.
Yes, yes, and absolutely, and that's because of what the lubricant additive manufacturers put in when they go through the blending process. But literally, we have jugs of clear fluid back at the office, and barrels of it in the labs. It's absolutely.
For me, when I think always on old motor oil, and when I go to the how it's called when you go to a shop and he refurbished the oil and
I mean, in North America, you'd be going to a Jiffy Lube, a Mr. Lube, a Walmart, to the automotive. They do an oil change.
Okay.
And
they do the oil change. Okay.
Yes.
Normally we go to a car manufacturer to the wholesale salesperson and they change the motor oil. Okay. But I don't know this in German, so in America. In Europe, it's a little bit different. But I always expect that they take the old oil and refurbish it. Is this not what they're doing normally?
No. What happens? Like if I just specifically go to North America, there's about 1.6 billion gallons of used motor oil generated every year. All right, and these are sort of pre-COVID numbers because this is a bit of an anomaly, obviously. But what happens is they collect around, on average, about 85% of that. Through authorized collectors who are licensed by the states or by the provinces in Canada. We have a high collection rate in Canada. And then about 55% of that is re-refined in Canada. Only 50% in the United States is re-refined. The balance goes back into the waste streams. It goes into the burner market for industrial plant fuel, and that's really where it goes. So you're seeing very little of used motor oil being repurposed into new motor oils.
Mm-hmm, mm-hmm. And in which way they are refurbished or recycled? What
right. Well, we have a 3-stage process, and that's different than our competitors. So in North America, there are roughly 20 different re-refiners. They use a 2-step process. So we have what's known as a contamination separation unit. We basically clean out the waters, any contaminants at that point, metal filings that come out of the engines, things like that. Where we're different is now we move into our 2nd stage. The 2nd stage for us is where we use a technology from Koch Industries, is patented as well, part of our IP. And we then strip out through solvent extraction the Group 3 base oil. Because what you need to understand is there's 5 grades of certifications for API, through API, American Petroleum Institute, for base oils. We focus on Group 3 and something that's known as a Group 2+. So we pull out our Group 3 through the solvent, we recapture the solvent so we can reuse it, and then we push about, rough numbers, about 1/3 of what came in the front door goes into our 3rd stage. This is a hydrotreating unit. And this is exactly similar to what all of our competitors do. So they'll have the contamination separation unit in the front and the hydrotreating unit in the back. They'll push 100% through everything. So they'll use up lots of hydrogen. They do it in gaseous form. They use a lot of energy, a lot more than we do. Whereas I said, we push in 100% and we're pulling out 1/3 through the back end. We use a liquid hydrogen, so we get greater coverage. We use lower temperatures, so we're not subject to gumming and fouling in our facilities. And that is what really distinguishes us and differentiates us from our competitors. We make higher grade products, and we do it with lower CapEx and lower OpEx.
Mm-hmm. So this is the big advantage. You create a product that is more value, has more value, and you have in the process what you use, it's cheaper to produce, I would say, and it's for a carbon thing or global footprint, it's better.
Yes, absolutely. I mean, if you look at re-refining itself, it's about 81% more effective and efficient in creating base oils than virgin crude refineries. Mm-hmm. And the reason for that is we're already taking a waste product, which is used motor oil. It's already been hydrocracked, so it's had lots of energy expended on it. And we take the waste and we'll make roughly 31.5 gallons per 42-gallon barrel of base oil, right? Whereas a virgin crude refiner will only make 0.5 gallon per 42 gallon. Mm-hmm. So it.
Okay, that's the one thing. So now you come to think. I think you have this patent, this process. Yes. Do you have these patents globally, worldwide, or is it only on one region?
No, they're global. We have 10 patents awarded, and we have another 7 pending right now. So yeah.
Okay, so but this brings me to the point: is they have the patents is one thing, to have the production is the other thing. So how you come now to this? Do you have a test facility or planning facility, or how it looks like?
Yes, we our predecessor that had the technology ran a pilot plant in Texas for 6,000 hours, 5 barrels per day. So they scaled down the technology, and the engineering firms that we're involved with, the Stantec's, the Koch modulars, the Process Dynamics. We had Wood Group in there at some points, and groups like Bechtel. So there's been an incredible amount of money spent on the engineering, north of 50 million Canadian over the last, over the lifetime of the technology. About 18 million we've spent in the last 2 years alone. And what we've done as well is vendor scale testing. So we would take the waste stream, we would purchase the waste stream through one of the authorized collectors, we would analyze it, we then push that through the first stage, clean it, see what we came up with. We'd then take those products or even what's known as a vacuum gas oil, because that's technically what comes out of the first stage. We would purchase that, analyze it, make sure it was exactly the same as what we were going to be pulling out of our first stage, push that through the Coke lab, and they would come up with the product. What we then did was we actually took that to a lubricants additives manufacturer, one of the top 4 in the world, called Afton. And they're based out of the US. They were very interested in what we were doing as a renewable company. And they then formulated 3 different passenger car motor oils. So that, again, is that 5W20, that 5W30, and the 10W30. And we're working towards seeing if we can be part of a 0W formulation, which is really where engines are starting to go as they become higher performance, higher compression engines, and lighter and greater emission standards are imposed on engine manufacturers. And we then took that, they put their formulations together. We ran those again to make sure that they met the API certification thresholds. And we went to API and they blessed us. They basically said, yes, you have a resource conserving product. So we have an SN plus designation and a GF5. These are valid for at least another year. And then what happens is we'll go into engine testing again next year, and that will carry us until they change the certifications again. I think the greatest validator of what we're doing right now, though, is the fact that we have just signed a letter of intent with a super major, a global super major, for the offtake of a newly announced plant in the US Gulf Coast. That'll be double the size of our Alberta facility. They've run the samples that we've given them through their facilities in Europe, and we've passed with flying colors. So now we've moved to the commercial stage, and we're in the middle of negotiating a definitive agreement. We've also had a second super major, and again, I'm sorry, I'm not allowed to use their names right now. We're under NDA with them, but this will change. And the second super major literally gave us results yesterday, said that we had passed with, again, with flying colors. It wasn't a great surprise that we would. We knew we would. And so we're going to see where that takes us with them, So
okay, but sorry to interrupt you. But so that's mean, but at the moment you don't run a facility by your own.
Correct.
But you're working now, and this is the process that you're working like with super majors. So, but super majors is like, for me, is BP, Total, Shell, or something. Is this a kind of super major?
Yes, those are examples of super majors.
Okay, perfect. Then we speak from the same side. Then for other companies, say super majors are, I don't know, Husky or something. It's a major, but maybe not a super major.
Historically, it would have been something like the Seven Sisters in the 80s and 90s, what they referred to them. But yes.
Okay, perfect. So, but the business model is not to coming up really with your own facilities. It's more you're coming up with partners, and they're doing the investment, the capex, or is it a similar or both strategy? You build your own facility and you go with partners, or how the business model looks like?
Sure. Okay. So our model is threefold. We will finance and build our own facilities. We will build those facilities with partners in locations around the world. We will go in and joint venture on existing re-refineries and insert our second stage into their 2-stage process in order to help them bring their product quality and margins up. And we will also license our patented IP to vendors that require, that they don't want a partner. They'd rather just pay us a fee. In the case of our situation with the supermajor, we have advanced planning and permitting on a facility in Alberta, and we're in the midst of raising capital for that project. That's a 2,800 barrel per day facility at a capex of, I'll use US numbers if that's easier for you, 90 million, excluding what might have to come with the site, such as rail sidings or tanks, things like that. The US facility, we're in negotiations right now with, or I shouldn't say, we're examining an existing re-refinery to purchase it. We're also looking at brownfield industrial sites in the US Gulf Coast so that we can go in and accelerate permitting. And again, this would be in conjunction with financial backers, debt or equity shareholders at the project level. That's our primary goal, is to avoid dilution at the pubco level, because the Alberta facility, as I said, is around 90 million US. The US facility, the second one here, would be closer to $180 million US.
Mm-hmm. But this is only on project level, not on the company level. So no dilution for shareholders.
That's the goal. Yes. I never say never, because, depending on who you take money from, they may have a desire for a financial sweetener, a warrant, some options at the public level. But I think ultimately the dilution that you suffer in the pubco, our goal is to minimize it and respect the existing shareholders. They've been patient. The most important part for us is to get that project out of the gate and start selling to the supermajor. And the reason we're focused on the supermajor right now, obviously, is it's an incredible de-risking step in the funding process. Mm-hmm. Right? We have had other off-takers, been in business 35 years. They do business with companies like Chevron. They're members of the same association, ILMA, which is Independent Lubricants Manufacturers Association in North America. But to some of the banking groups that we're dealing with, or the family offices, they go, we don't know who these people are. We need a household name. Mm-hmm. That's mm-hmm. where we are today.
Mm-hmm. Mm-hmm. So, but this means on the other side, when I was a little bit summarize. So sure. Or I asked one question before. When we're looking now for the next 12 to 18 months, what we can expect as shareholder from your company? What should the news flow looks like?
Right. The first one I would anticipate would be the definitive agreement with the supermajor.
Is it then now allowed that you say names? Then
not yet.
No, not yet. But when you signed it, okay.
Yes, we've discussed that with them, and in fact, the reason we didn't put it into the press release announcing the letter of intent was because it was going to take over a month for them to gain approval on the contents of the press release. And as a junior public company, we don't have the luxury of sitting around with material information and hiding it. The next step I would anticipate would be financing for the US Gulf Coast facility and potentially for the Alberta facility. We are entertaining some term sheets right now, and we're going back and forth on those. So those would be for the smaller project in Alberta, but those are going very well. After that, I think you would probably see an announcement of not only Plant 1 and Plant 2, but I would think that we'll be moving rather quickly towards Plant 3. Because our systems are modular, when you're fabricating them, there are economies of scale to what we're doing. And because the technology is disruptive to the re-refining industry, nobody else makes a Group 3, maybe with the exception in Europe of a Pura Globe. But that would basically be it, or perhaps it's a Vista. I can't remember right now. That would be the only one. And so we have plans to build at least a dozen of these facilities around the world. Our goal is to really build up an annuity paying business here. Our focus is on EBITDA and obviously doing good for the environment, doing good for, the sustainability goals of the UN, things like that. Those are all very important drivers to us. But this is an impact business. We can make a considerable amount of money, and we're very cognizant of the fact that once you de-risk projects by actually building them and showing your revenue streams, you become a takeout target to much larger companies. You know, the GFL environmentals of the world, that would be a prime example. Groups like Parkland, these companies typically take out cash flowing green businesses or even distribution businesses in the the hydrocarbon space at 6 to 7.5 times EBITDA. So when you're talking about 100 million coming off a US Gulf Coast project, or just under 50 million US coming off a Canadian project, there will be a lot of eyeballs on us.
So, but coming to what's coming to my mind, if when we look at now to one project, and you don't, we speak from Aber the project, for example. What is now really your revenue stream? What you get? You say the financing is on the not on the public level, is on the project level. So what do you deliver to this project, to the technology? Is this a machine? Is this a license? And what is the revenue stream? What you create from that?
Right. Well, in the case of Alberta right now, we are looking specifically at, we own the project, right? It's permitted. We've brought a term sheet, an indicative term sheet from Export Development Canada and a green fund from 2017 federal budget here for up to $72 million. So that's debt. We're trying to add equity to that. And with that equity discussion, we're in discussions with a group of First Nations right now in Canada. There will be an equity give up. Now, where that lands at the end of the day, I can't tell you. Is it 20%? Is it 40%? But the most important thing is, what is the pool that's available? We, based on the engineers' reports, based on the super major letter of intent, the index that they've provided for us for pricing of our product, based on our signed LOIs with used motor oil suppliers, we're looking in the range, as I say, of just under 50 million US coming off that project. So how we divvy that up, it's to be determined, and it's to be determined within the next few months as we finalize financing. Our projects, though, because they spin off so much, or should spin off so much cash, we're leaning more towards debt and trying to take a higher percentage of debt, whether that's 80, 90, if possible, 100% debt. We know that the real world requires an equity component, but that would be the give up, right? And that's to be determined. We're in discussions with several firms, primarily in the United States, New York, Chicago. We're definitely in talks with some groups in Canada, but you have to remember, and you especially would know this, that a lot of the equity market has been hollowed out of Canada over the last 5 to 10 years, especially with the cannabis markets and the bad news about oil and oil being landlocked. And, fortunately, it's been an opportunity for us now because we're on the rise, the ESG firm, environment, society, governance. That's really where we fit. And so the market is now coming to us, and we're starting to take more and more phone calls about the equity or the debt component.
When you make, when you have the financing in place and you start now to build this facility, how long it takes from building to production? Right.
The timeline given to us by PCL, which is the largest EPC contractor in Canada, 5th largest in North America, is fixed price, fixed schedule certainty. So it's 18 months. And that's in Alberta. We're believing that it will be very similar in the United States. Early indications are that it will be the same. But of course, we have to finalize where the site is before we can start getting into that. Is there rail infrastructure on site? Is there a hydrogen line running past the property? Are we going to have to truck the hydrogen in? What permits are in place on that site? But again, the early indications from EPC contractors and from Coke are that this should take 18 months to plant commissioning.
Mm-hmm. So see, when you look at the share price, you have a pretty good run since September. So your stock is more than doubling in this time. So is this from the news flow with the super major?
It's twofold. Yes, the super major news is very important milestone, certainly a de-risking milestone. That actually triggered some high net worth individuals to come in and start purchasing in the market. We also brought on a firm called Blue Deer Capital out of Toronto, a long-term relationship with my CEO. And newer firm, but the principals have had this long-term relationship. And again, they've come on as financial advisors, and they have brought additional investors into the market for us. One of the nice side effects of all of this is that we have some warrants expiring this month, and they're well in the money. So we're seeing some additional financing, which in the whole scheme of things, is non-dilutive, and it's rewarding long-term shareholders who have backed us through our myriad of technology steps. And this is SG&A money being raised right now.
Mm-hmm. Coming to the shareholder structure itself, how many shares are outstanding? Are there bigger groups? So how many shares have the management, and so on?
Sure. Roughly, on a basic basis, of 87 million, I'm rounding here. Fully diluted, just over 102, 103 million shares. Yes, there are significant shareholders. I could probably list 10 or 12 shareholders and identify 60, 65% of the stock. Mm-hmm. Outside of that, I know the houses that have it, but I couldn't tell you the individual groups at that point.
Mm-hmm. Mm-hmm. Are these more wealthy individuals or bigger family office or funds?
They're more high net worth individuals. At this point. Our goal obviously is to evolve the story and move to that point where we're going into plant commissioning. At which point I fully expect we'll have more institutions looking at us. And I was in a meeting yesterday with an investment bank in Canada, and their very goal, at least their pitch to me, was that's what they wanted to bring to us. Mm-hmm. So
to summarize everything a little bit, or that you can summarize a little bit, can you say me the next 3 top drivers or 5 drivers what the share price bringing up in the next, or what the shareholder looks for? So
yeah, sure. I think that the shareholder has discounted us because they're looking for financing. But the first one would be the signing of a definitive agreement with the supermajor and naming the supermajor. The second will be the financing of 1 or 2 of those plants. The third will be announcing a third facility, which we've already started looking at. And that would be a retrofit project. Outside of that, I think it would just be punching out our financials and showing people how we are starting to make money, and we are starting to establish projects in other jurisdictions. We have already been approached in places like Singapore, Australia, Germany, the UK, South America. We approaches in Mexico, and now we're speaking to a group about Chile and Argentina and Brazil. So there's going to be an enormous trap line of projects coming down the pipe. And, I'm happy for our engineering team and Gord, our president, who oversees all of this. He's finally going to be able to get to work and really immerse himself in that. But from a business development side, we're going to be extremely busy tackling other plants. Mm-hmm. So that's what I see over the next year to 2 years.
Okay. Mark, thank you for the first introduction to your company. It was really interesting. Ja, es war das erste Interview mit Gen 3 Oil Corp, wobei Oil Corp eigentlich nicht richtige Firma ist, eigentlich ist eine Clean Tech Company. Sie haben eine Technologie entwickelt, wo sie quasi altes Motoröl aufarbeiten, aber in einem anderen Prozess, als wie wir es kennen, beziehungsweise kennen wir es nicht, aber ich habe immer angenommen, dass das Motoröl, das also gewechselt wird, dass das irgendwie aufgearbeitet wird. Und er sagt, das sind auch die Konkurrenten, aber die haben einen 2-Stufen-Prozess und in einem 3-Stufen-Prozess können sie in ein höherwertigeres Produkt umwandeln. Das heißt, es wird wieder eigentlich genutzt, wieder aus Motoröl, und dadurch kriegen sie viel, viel bessere Preise, und sie können das auch noch machen in einem wesentlich umweltverträglicheren Prozess. Das ist auch extrem wichtig. So, nachdem die Company produziert, ist natürlich das große Thema, wie können Sie oder wie bringen Sie das in Produktion? Weil sowas kostet ja trotzdem auch einen Haufen Geld, und eine kleine Produktionsstätte in Alberta kostet 90 Millionen, das sind ja auch immerhin US-Dollar, sprechen wir da, ist ja auch schon ein Haufen Schotter. Und wie sie das hinbringen wollen, ist natürlich auch, und das ist sehr spannend, sie wollen es non-dilutive machen für die Public Company. Das heißt, die Finanzierungen finden in den Projektgesellschaften statt. Diese Projektgesellschaften wird teilweise auch in Equity reingenommen, und wie der Kuchen dann verteilt wird, ist wieder ein anderes Thema dann, aber sie kriegen quasi aus diesem Kuchen den Revenue raus, und dazu sozusagen wollen sie allerdings, dass es non-dilutive ist bei der Mutter-Company, also bei der Company, die an der Börse notiert. Also sehr spannend. Was aber jetzt den Trigger gebracht hat, so in den letzten Wochen, war vor allem ein LOI, den sie mit einem Supermajor unterzeichnet haben. Und Supermajor habe ich immer auch gefragt, was sind das für ihre Companies? Das Supermajors sind nicht die kleinen Ölfirmen, Milliardenkonzerne, die in den USA bekannt sind, sondern halt diese Firmen wie PP, wie eine Shell, wie eine Total, das sind Supermajors, und er hat das auch bestätigt, dass wir von so einer Kategorie sprechen. Ich glaube, das ist extrem wichtig. Und was auch nur die Quintessenz ist, oder was eigentlich 30 Millionen ist ungefähr die Marktkapitalisierung, 87 Millionen haben sie Aktien draußen, fully diluted 103 Millionen, und er sagt, 10, 12 Aktionäre stellen ungefähr 60% des Business da oder der Marktkapitalisierung da. If I remember me right, the biggest top 10 or top 12 shareholders own around 2/3 of the company.
Correct.
Ja. Also die Top 10, Top 12 machen 2/3 der Marktkapitalisierung. Das heißt, der Free Float ist natürlich auch relativ eng, was natürlich relativ spannend natürlich ist für das, was die Aktienkursentwicklung ist. 30 Millionen Marktkapitalisierung ist auch nicht der Wahnsinn. So, und dann habe ich gefragt, was könnten jetzt die Treiber sein für die nächsten paar Monate, Quartale. Also ein definitives Agreement mit diesem Supermajor, ganz spannend, dann die Finanzierung von 1 oder 2 Projekten, wo sie jetzt drauf sind, und das dritte ist dann, wenn sie quasi das dritte Projekt finalisieren, einen Standort finden und das dementsprechend umsetzen. Das sind die Treiber des Aktienkurses. Und eins ist ganz klar, wenn der Supermajor announced wird, dann wird es den Aktienkurs, glaube ich, zerreißen. Das ist, glaube ich, sicher, weil bei der Marktkapitalisierung, bei der engen Aktienstruktur könnte es da ein Riesenthema werden. Das könnte sozusagen so ein sogenannter, wieder von mir, so ein Superzock werden sozusagen, wo man sagt, okay, man kauft sich ein bisschen was, schaut, ob es passiert, weil das könnte ein Riesentreiber werden. Also extrem spannend. WKN steht da. Schaut euch den Titel an. Das klingt echt spannend. So, das war's von meiner Seite und von dem Mark Redcliffe von Gen 3 Oil Corp im Dezember 2020. Tschüss und Baba, für euch.